Hello, welcome back to our channel where we strive to help you build wealth and achieve financial independence. Today, we're diving deep into investing strategies for long-term growth. If you're looking to build wealth and secure your financial future, then this video is for you. So let's get started. Before we dive deep into specific strategies, let's establish a foundation. When it comes to investing, it's crucial to have a long-term mindset. Successful investors understand that wealth isn't built overnight, but rather over time through consistent effort and smart decisions. So let's talk about the first key principle. Principle number 1, start early and be consistent. The power of compounding is your best friend when it comes to long-term growth. The earlier you start investing, the more time your money has to grow. Even small amounts invested consistently over time can make a significant difference due to compounding returns. So don't delay, start investing as early as possible.
That people buy stocks today or tomorrow or next week or next month. I think it all depends on your circumstances, but you shouldn't buy stocks unless you expect, in my view, you expect to hold them for a very extended period and you are prepared financially and psychologically to hold them the same way you would hold a farm and never look at a quote. You don't need to pay attention.
If you go to the gym and you work out and you come back and you look in the mirror, you will see nothing. And if you go to the gym the next day and you come back and you look in the mirror, you will see nothing. Clearly there's no results, can't be measured, it must not be effective. So we quit. Or if you fundamentally believe that this is the right course of action and you stick with it, you commit yourself to an act of service. You commit yourself to the regime, the exercise. You can screw it up, you can eat chocolate cake one day, you can skip a day or two, but if you stick with it consistently, I'm not exactly sure what day, but I know you'll start getting into shape. I know it. Going to the gym for 9 hours does not get you into shape. Working out every day for 20 minutes gets you into shape. It's not about the events. It's not about intensity. It's about consistency.
Principle number 2, diversify your portfolio. Diversification is the key to managing risk and maximizing returns. By spreading your investments across different asset classes such as stocks, bonds, real estate, and commodities, you reduce the impact of any single investment's performance on your overall portfolio. This strategy helps you navigate market volatility and increases your chances of long-term growth.
People love to see successful stories, but most of the success stories, they succeed because of the mistakes. I encouraging all the young people, entrepreneurs, to learn from the mistakes. If you learn from the mistakes, if you learn, especially the failure case studies, it's going to help you. What I want to say, it's not about you. You learn from mistakes does not mean you will avoid mistakes. You will learn the attitude towards these mistakes and never give up fighting again.
Everybody make mistakes, and if the mistakes you're going through are gonna help you become the person you need to be later on. All them mistakes, dog, they cool to make. I needed to mess up every marriage. I needed to get arrested like I did. I needed to get shot. I needed all this, dog. I needed all them things to happen to turn me into who I am today. So when you're young and you make mistakes, don't let them eat you up. Because everybody that done made it, done made them. You got to fail in order to win.
Principle number 3, invest in low-cost index funds. Index funds are a popular investment option for long-term growth. These funds track a specific market index, such as the S&P 500, and aim to replicate its performance. They provide broad market exposure and have historically outperformed actively managed funds due to their low fees and passive nature. Consider allocating a portion of your portfolio to index funds for consistent long-term growth.
You've got to be prepared to, when you buy a stock, to have it go down 50% or more and be comfortable with it as long as you're comfortable with the holding. And I pointed out 3 times in Berkshire's history when the price of Berkshire stock went down 50%. There wasn't anything wrong with Berkshire when those 3 times occurred. But if you're going to look at the price of the stock and think that you have to act because it's doing this or that, or somebody else tells you, well, how can you stay with that when something else is going up or anything? You've got to be in the right psychological position. And frankly, some people are not really careful. Some people are more subject to fear than.
Principle number 4, stay invested for the long term. Timing the market is nearly impossible, even for seasoned professionals. Instead of trying to buy and sell investments based on short-term market movements, focus on your long-term goals and stay invested. Historically, the stock market has shown consistent growth over the long run despite periodic downturns. Don't let fear or greed drive your investment decisions. Stay the course.
The real test of whether you're investing from a value standpoint or not is whether you care whether the stock market is open tomorrow. If you're making a good investment in a security, it shouldn't bother you if they close down the stock market for 5 years.
For making an investment and laying out money now is to get more money later on, right? That's what investing is all about. If you buy Coca-Cola today, the company is selling for about $110 to $15 billion in the market. The question is, if you had 110 or 15 billion, you wouldn't be listening to me, but I'd be listening to you incidentally. But the question is, would you lay it out today to get what the Coca-Cola company is going to deliver to you over the next 200 or 300 years? The discount rate doesn't make much difference after as you get further out. And that is a question of how much cash they're going to give you. It isn't a question of, it isn't a question of how many analysts are going to recommend it or what the volume in the stock is or what the chart looks like or anything. It's a question of how much cash it's going to give you. That's the only reason. It's true if you're buying a farm. It's true if you're buying an apartment house. Any financial asset. Oil in the ground, you're laying out cash now to get more cash back later on. And the question is how much are you going to get, when are you going to get it, and how sure are you?
Principle number 5, educate yourself and seek professional advice. Building wealth requires knowledge and understanding. Educate yourself about investing principles, strategies, and financial markets. Read books, follow reputable finance channels, and consider working with a financial advisor who can provide guidance tailored to your specific needs. Remember, investing involves risk, and professional advice can help you make informed decisions.
I think what a lot of people don't realize is that people who are successful, really, they don't mind sharing the principles. The mistake that most people make when they go after people is they go after them for something. But if you go after a person for advice, most successful people don't have a problem sharing the principles of success. Most people that I know that are successful don't have a problem with teaching you how to fish.
To recap, building wealth through investing requires a long-term mindset, consistency, and smart strategies. Start early, diversify your portfolio, invest in low-cost index funds, stay invested for the long term, and educate yourself along the way. Remember, building wealth takes time, patience, and discipline. So start implementing these strategies today and watch your wealth grow over time. That's it for today's video on investing strategies for the long term. If you found this information helpful, be sure to give this video a thumbs up and subscribe to our channel for more wealth-building tips and strategies. If you have any questions or topics you'd like us to cover in future videos, please let us know in the comments section below. As always, thank you for watching, and we'll see you in the next video.